As the chief executive of a company that is, potentially going to be remembered as a sort of poster child of COVID and the discontents it visited upon all of us, what would you do differently? If you could go back a year to when a lot of this began, what would you do differently?
Well, yeah, first of all, it's good to be with you. What will we do differently? Of course, everybody's learned so much more, about the virus and everything. Now there's been a tremendous amount of science and learning, and obviously there's still more to come. So what we would do differently, obviously, we voluntarily paused almost a year ago, back in March. We would have paused sooner, for sure, knowing what we know today. But at that time, of course, no one knew. But that would be the biggest thing. Other than that, we did all the things prior to that allowed us to survive this up to this point. And we think we have a nice liquidity runway well into next year now. And that's if we had zero revenue. So we started with a really strong balance sheet, and we managed that proactively for many years prior to when this happened. And because of that, we were in a position to weather the storm.
Let's just talk about the liquidity. If I have my figures right, you've raised, I think, $22.5 billion during the crisis, all, as far as I understand it, virtually. If it weren't for Zoom and high-speed internet and all of the things that have actually allowed this, would a company like this have just gone under? I mean, it feels like there has been the timing is quite fortuitous of an event like this where we can all do everything remotely.
Yeah, there's no question. If someone has said just a few months prior to the advent of the virus that we would be able to raise $23.5 billion virtually with no one in an office, not our people, not the investors, not the bankers, not the lawyers, no one in an office, everybody would have, thought they were crazy. So the technology has certainly made things possible that didn't seem possible before. But what I also know is that people in a time of crisis kind of figure things out. And so I wouldn't speculate that it would have been impossible without today's technology, but there's no question it would have been far more difficult.
And obviously a lot of that stuff that you raised, financing that you raised, was done in fairly aggressive market conditions. Are you back in the refinancing markets at the moment? And if so, how much?
Yeah, no, right now, as I said, we have a nice liquidity runway. We're at the point where we still have additional debt if we could secure if we needed it. And obviously, we will be opportunistic with regards to the balance sheet overall in terms of looking at equity and so on. But at this point, we have the liquidity we need, to take us well into next year. And so with zero revenue, and obviously we're hoping to have some revenue this year.
Now, sure.
But yeah, in the beginning, it was a tough time. Some of the debt we raised were at rates, that we never would have even considered in the past. And even more recent ones are at rates where we're happy about them now. But, 2 years ago, we wouldn't have been happy with those rates. So it is what it is, but, we'll adapt. And we have a great resilient business, a great resilient industry. We will be able to generate lots of cash. And over time, we'll get back to the solid credit rating that we had prior to the pandemic.
I'm interested in that resilience that you mentioned there, Arnold, because if I look at this industry, look, every industry has suffered through COVID, but I think when I think about the cruise industry, there have been some real and very visceral horror stories that have gone on over the last year. I understand you have a sticky customer base, but how do you pitch this as a model to new potential cruisers?
Well, first of all, you're right. It has been a very difficult time because zero revenue when you have a burn rate of even when you've gotten very conservative like we have. We've reduced a lot as we got cash conservative. But $600 million a month burn rate and zero revenue. So that's not exactly the world's greatest business model. Having said that, as we look ahead, we have over 8 million repeat cruisers in our world and of Carnival and our 9 world-leading brands. And there's pent-up demand. They cruise on average once every 2 years. And so there's a whole year of repeat cruises, basically, that haven't been able to cruise. And so we have plenty of pent-up demand. Additionally, we've reduced the size of the fleet because obviously we had ships that were less efficient And it didn't make sense when they weren't generating revenue to continue to invest in those ships. That's one way we got our burn rate down. And so we plan to exit 19 ships. So that takes our capacity down when we do come back. Furthermore, it's going to be a staggered return. All the destinations aren't going to open up at once. Different destinations are going to open at different times. And so there will be plenty of pent-up demand, as is evidenced by the bookings already. As you look at late 21 and first half, second half 22, where the bookings are stronger than they were even prior to COVID on the same basis.
But Arnold, if the cruise, and from what I understand that this is right, if the cruise of the near future is sort of more people, on these boats in sort of isolation from one another, doesn't it lose something of its essence? I mean, isn't the whole allure of going on a cruise that you get these, you get to jostle and mingle with strangers, you have this sort of conviviality, if you like, lulled into conviviality by the waves and the ready supply of aperitifs. If you don't have that, then do people really want to go cruising?
Look, first of all, you're absolutely right that travel and cruising in particular is about people connecting with other people. What people remember are other people on the cruise. Yes, the ships are fabulous. We have lots of features, but it's all about the human spirit and human exchange. And people learn what they have in common, and then they learn to celebrate the differences rather than fear them. And that's whether it's crew to guest, guest to guest, or guest to the locals in the various destinations that they visit. So you're absolutely right about that. Having said that, we already resumed cruising in Italy with our Costa brand and in Germany with our AIDA brand on a very limited basis. But our net promoter scores and basically our guest satisfaction scores were through the roof. People love the experience. Now, the second part of that is you can't look at a point in time. So those cruises had all kinds of enhanced protocols, universal testing, additional medical screening. Everybody had to wear a mask, physical distancing, enhanced air handling systems, enhanced sanitation processes. When they went on excursions, they're very controlled and distanced and so on. So a lot of rules and regulations, but people still had a great time and still exchanged. Having said that, that's all going to evolve with the advent of vaccines, with the acceleration of treatments, advanced treatments that mitigate the risk of either hospitalization or long-term effects or worse from COVID. As the risk goes down, then the need for a lot of those different things will begin to mitigate as well. And but even with those things, we were able to have some of our, in fact, amongst our highest ever guest satisfaction scores through our Net Promoter Score.